Hello everyone, my name is Denis, and in this video we'll talk about Intuit incorporation with ticker INTU. And it is extremely interesting because we can see on pre-market minus 14.7%, and I think in theory we can see like $300 on this week or something like this. And definitely it is interesting because I watched how the market closed, and in a second it was like minus 10%. It is definitely interesting, and first of all we have to talk about valuations. Previously the average numbers was 10.9 by price to sales, close to 14 price to gross profit, and extremely high number in price to earnings, 56. Now we have some sort of SaaS apocalypse, and it is a little bit sad for me. From my point of view, this company can grow for 10% in the future by revenue, and I think they are able to control their net margin somewhere near 20%, maybe a little bit higher because they just fired a lot of people, and maybe we will see something good in margin. But anyway, we will start from their guidance. Here you can see the numbers. Actually, we can see here total revenue. Previously it was $18.8 billion, and now they are expecting for the fiscal year 2026 21.3. And I think it is awesome because growth rate quite good, 13 to 14%. Lots of analysts expected like 10%, and it is definitely awesome. Then we have this number. It is GAAP or GAAP diluted EPS, and it is 15.79 to 15.84. It is awesome number from my point of view again, and if we will calculate it really quick, I have this chart. If you don't know what it is, you can just watch my previous videos. But anyway, we have a company with revenue growth rate 10% and margin 20%. And if everything will be the same, and they will just spend all of their money on buyback or dividends, doesn't matter. We have quite normal valuation with price to sales 4 and price to earning 20, and we will spend 16 years to tenfold our money with compound annual growth rate 16%. From my point of view, this company will trade in the future with close to these valuations, and we will just remember price to sales 4, price to earning 20, and if we will multiply 15.8 to 20, we'll get 300 with something. And now I think Intuit just reached normal valuation, and if you think that this stock will come back super fast, I think it is not true, but it looks like in this specific niche they wouldn't be disrupted, and from my point of view it is awesome, and probably we will just grow with this company. It is not really bad because 16% rate, it is quite good, and I think it is not a super bad company. But if anything will be not like they're saying, or we will expect like bad numbers in fiscal year 2027, it can be bad. And when I'm saying bad, you can check PayPal. And if you don't know PayPal, I think growing not with 11% growth rate, or we can check it super fast here. It is just 5%, but anyway, they are valuated by 8 price to earnings. And if we will see something like 10, it is another minus 50% for the stock price, and it is definitely not interesting. I'm holding some money in Intuit because I think we can expect some sort of a dead cat bounce. Maybe it will be a quick run to 500 or something like this, or maybe we will just reach 600 maybe in 2 years. Again, nobody know it, and it is a little bit sad. What actually I am 100% sure that it is not possible to expect here come back to price to sales 11 and price to earning 56, and I can just write it here 10.9, 14 and 56, because it will end with like close to 900 bucks in share price, and if we will see something like this, it will be like plus 170%. I really wouldn't be against it, but it is not possible in this market condition. Plus, we have a really bad news about Fed funds rate, and I am actually inviting you to my Saturday stream 11 ET, and I hope it will be interesting. Anyway, write down your thoughts about INTU. It is interesting for me. Maybe I missed something, but from my point of view, it is just a drawdown for a long time, and maybe we will fluctuate on these numbers for a huge amount of time. Also, we can check this stock on Guru Focus, but I think it will be the same numbers. You can see like future revenue growth rate 12.55, like they expect in guidance, and a little bit faster EPS growth rate. Definitely it is awesome stock, but if we will check the price to earnings, here you can see price without 14% discount, but anyway, you can see that previously it was 60. Now I think we will fluctuate somewhere near 20, and maybe we can jump off on 40 if we will be super lucky. But anyway, with the same amount of volatility, we can see like 15, and it is like minus 20% more, yeah. Or maybe not. Anyway, thank you for watching, and bye bye.